A great start. We are definitely getting out of correction territory. It looks like that because the trend is moving in that direction. Better than 2-to-1 advancing to declining stocks. And the cyclicals are leading again. And this has been a characteristic of the whole month here. Bank stocks doing great as we go into earnings season. That is a very positive trend. Healthcare, which was a market leader, doing okay, but it's not really strong. Tech is the big market leader again. Cyclicals again doing well. Energy's okay, but it's sort of topped out in the last few days as oil has stalled around $52 here. I want to show you the bank ETF, the KBE. We're up 9% so far this month. There's a bank earnings, some of the bank stocks, Bank of America, Goldman Sachs, Comerica, and U.S. Bancorp. I want to look at the KBE for the month here. This is the bank ETF, 9% for the week. The month, excuse me, up 2% for the week. There it is for the month. You see how we went down and now have come back here. This is a very good sign. They're not sold into earnings, but remember, a lot of these were down 25% in the fourth quarter. So a very good sign as we're in earnings season right now. As far as the bank earnings, I emphasize less emphasis on trading and more emphasis on how the consumer business is doing and the business is doing here. If you look at Bank of America, consumer loans up 5%, commercial loans up 2%, deposits up 3%, net interest income, how much money are they actually making on their interest? Higher rates, loan growth helping them out. It's up 7% overall. These are good numbers and very similar to what J.P. Morgan reported yesterday. Let's move on and talk about BlackRock very quickly. A lot of discussion. There was a lot of talk that their assets under management declined. Well, it declined because the market went down, not because suddenly people were taking money out. In fact, the inflows were very strong. This is a giant in the ETF business. It is the giant in the ETF business. $81 billion in inflows in the fourth quarter. Folks, that's a quarter of all the inflows for ETFs last year, a quarter for the whole year for everything. That's how big they are. Their assets under management for iShares, their ETF business, $1.8 trillion. That's about half of the value of all the ETF business in the United States. It's an amazing number. Total ETFs under management, $3.6 trillion. Their total assets under management there. I mean, that's an amazing number if you take a look at what's going on there. There's BlackRock. Of course, all these asset managers have problems because good news for the consumers, low-cost ETFs makes it tougher to run these businesses. They've got to get more efficient. But if anybody can do it, BlackRock can certainly do it right now. So where are we right now for the markets? The good news is we've resumed the upward trend. Remember I said 2 days ago we're stalled out after that great run at the end of December? We are now back on an upward trend in the last day and a half overall. The S&P dropped number of points between December 4th and December 24th. We probably dropped 450 points. We've regained 60% of the losses in December. That's an uptrend that we've got, and it's the cyclicals. It's your tech, industrials, and banks that are the leaders overall. These are very, very positive trends off of that December 24th bottom. As far as the earnings go, I reiterate, first quarter numbers keep coming down, but in a way the market already anticipated in that big drop in December. 8.1% is what we thought first quarter earnings were going to look like on the 1st of October. Today they're down to 3.3%. I think they might go down a little bit more, but not dramatically that much more. I think a lot of this damage is already done. Still got to figure out what that government shutdown means and, of course, any implications from Brexit.